Okay, it's 8 o'clock and good morning. I'll be on Discord and YouTube. I think I'm just checking that both are up and about. The slides certainly are on YouTube. So I'm just going to start by mentioning a couple of disclaimers. Okay, it's 8 o'clock and good morning. Okay. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Just quickly going back to my bio, as I said previously, what's relevant here is that I've been around for a while, that I trade both discretionary and algorithmically, and I look at markets both on a very, very short-term perspective and a slightly longer perspective. So let us get rid of those slides and turn on the streaming for today. Okay, I'm just going to dig out an agenda. Okay, we're going to have a very, very quick look at today's economic calendar. Actually, this is, looks like the slides. I'll stick to the agenda I mentioned in Discord earlier, which is we'll look at the, let me get rid of all of those. We will look at the economic releases for today, which is essentially the 8:30 non-farm payrolls and related items. That's the big one, and that is going to dictate a high level of volatility. And that means that, for example, the futures margin that your broker applies to your account will likely be adjusted for a short period of time. And then there is no other major news until about 10 a.m. So for the purposes of this hour, we do have one volatile piece of information, and that is the 8:30 non-farm payrolls or jobs release. Okay. Right. If anybody has any comments, feel free to post them in YouTube or in the Discord channel. I am in both, so I can read them both. And one of the things that I really wanted to look at, sorry, there's some spam in my channel, so I would just ignore it. One of the things I really want to look at was the concept of supply and demand, and actually apply it practically to what happened in London today at the Open. And by the Open, I mean the European Open, which really stretches from about 1 a.m. or 1:30 a.m. Eastern time right through till 5 or 6 or 7 a.m. So it's really that period of time. And I just want to put some context behind this. So I'm just going to drag over a volume profile just to explain where we were. So this is this session here. In the shaded ones in grey are ETH, and the white ones in are RTH. So if I just drag that out of the way. Coming into today's session, we'd formed a new balance, which was essentially around 4,532 down to about 4,510. So essentially, let me use a pen as well. Let me drag a pen over. So, when we're talking about balance, RTH dominates over ETH. There's just a lot more volume. These profiles are not scaled accordingly, so they're all equal width, whereas in truth the volume for RTH will be much more significant than for ETH. But essentially that level of value was that period there. And because we'd had two sessions, if we include the ETH and the RTH, so we had two sessions, there was a potential one of the possibilities, or one of the potentials, was there were some players positioned with their stops here that would have been worth flushing out. Now, if we go back and we drag forward what actually happened, may I just actually erase that drawing? Okay. And what we're going to do is put some context, and then we're going to look at how we could have played this in Bookmap using the concept of supply and demand. So the idea was you've got a daily high, which is that level there at about the 40 level, and the previous ETH session, which also coincided with value from the previous RTH session up around the 47, 48, 49 mark. So you had two potential areas of stops that people could have placed. They could place them above the previous day's high and also above this joint value. One of the things that I'm going to keep repeating day after day, as long as I do these webinars, is that there are certain levels or certain games that they will play more than most in the ETH session, and there are certain things that they like to go and hit. I may refer to these as home or the previous day's range. By home, I'm talking about the settlement value. So on this chart, it's these pink lines here. So it's a pink line in white there, the settlement value there, and yesterday's was around about 4527. Okay, so there are a few games that they do play. One common game is they will go and tag that home or previous day settlement level. The other game that they often play is, can they target the stops above yesterday's daily high or yesterday's Globex high, and can they target the stops below yesterday's daily low or yesterday's Globex low? So in other words, in simple terms, was there a game worth playing to get above this high there or that low there, and how does that play out when you actually analyze the value that was formed in that session? So not only are you looking at the exact high and the exact low, but you're looking at where this profile tapered off. Here it's nice and clean, it's basically around there, but on the upper side you've got a thin taper there, a low volume node, and you have another taper at the very top as well. Okay, so that was just one scenario that could have played out. Let me just get rid of that. Okay, so now if we look on our TradingView chart before we then get into Bookmap and have a good squiz at what actually did play out, we've got the Asian session. So you've got the open, and the context there after the open was that there was an earnings release. We mentioned this the other day. This is earnings week. I'm just going to check, make sure there are no questions. And I am speaking a little bit quickly because I want to cover a bit of ground before we get to that economic release at 8:30. So bear with me as I try and speed through this so we get through the London action before 8:30. Okay. So we after the let me drag this back again. So after the close, we had Apple's release. So amongst the various earnings releases, the biggest player in town had its earnings, and it was a mixed bag. Some of their hardware revenue wasn't amazing, but their services revenue, things like Apple Music, etc., that was strong. So there was both good and bad news in the earnings released by Apple. So in other words, there was no clear message up or down for the market to go shooting higher or shooting lower. When that happens, there is the possibility that the ordinary game may come into play. And by ordinary game, I'm talking about what I just spoke about, which is that the common levels where they play those games, that's tagging yesterday's home or settlement level, playing with any stops above yesterday's high or below yesterday's low, and that's taking into account both the highs and lows of the Globex and the dailies, were in play. So if we then look at what happened in the Asian session, so the the general theme or direction was up, and it formed a high. There's one thing I do not like about this TradingView chart is that the scales are automatic. I never do that to any chart that I look at in Zero, but it's okay for presentations, but it just means that if I leave it on automatic and then I drag, the bars will become bigger and smaller based on what is displayed rather than keeping them the same. Anyway, let me just get rid of the automatic scaling there. So we moved up, we formed, this is coming into the London Open, we formed a nice almost double top, and that's where we can then go and have a look at the action inside Bookmap. So for as I mentioned, the European action really starts around about the 1:30. You've got the German pre-open about 1:45, 1:50, German proper open at 2 a.m. and the London Open at 3 a.m. So yeah, the first high there was formed about 1:51, and you've got another little high. So if we look at the action and we zoom right out and we ignore the action that's been going down and down since that high was formed, we go back to 1 o'clock. Right, and we have a look at what was there. So in fact, we can drag this even further. So you can see there, it's 151. The first one about the 130 mark, 126.57. The first thing that you're going to notice is I've marked in red the previous day's Globex high. Sorry, I should mention why that is marked in red. That's just the previous day's Globex high as a potential target where there may be stops. But the first thing you're going to notice when you look simply at this Bookmap chart is that there is a lot of liquidity for ES above. But you've got a band up there which did not get tagged at that time, but you've got a band of heavy liquidity close by, and you have no liquidity below for quite a long way. And the general approach that we take when we see heavy bands of liquidity is that the first touch or the first near touch is likely to be a point of rejection, but that if price cannot get away from it, that level of liquidity or that band of liquidity is going to become a magnet, and it's going to want to come back and revisit it. Okay, so I'm just setting the scene that we have a magnet up above, all right? And then we have price action coming into the London Open. If I quickly go and pull up the supply and demand graph that we had the other day, I'm just checking on YouTube to make sure that this is visible. Okay, so you have a level up above, and what tends to happen is they want to get up there, but they will come down to a level where prices are much cheaper in order to get the fuel to get up there. And if I draw how this tends to play out in some of these teachings of supply and demand, so we can look at some of the traditional approaches to supply and demand. Let me just try and get a whiteboard up here. Okay, let me get rid of that. Okay. And let me change colors. Okay. Traditionally, in supply and demand, you've got this low area here, and you've got this high area there. The big guys, for whatever reason, want to go from here to there. So the theory is that this zone of price is cheap, and they will buy again if we get down here in order to go up to there. So if you go and look at some of the supply and demand courses out there, they'll go on about the magical qualities of this zone here. Sometimes they talk about the the wick or the candle of a 15-minute bar or a 30-minute bar or a daily bar or whatever, and they say that if price gets back down here, it's likely on the first touch that will then rebound higher. So that really is the essence of demand or a demand zone in the supply and demand concept. And what we want to do is to see whether that can be then applied real time in Bookmap during a session where we have some clear evidence or fact-based evidence based on likely positioning of stops and heavy liquidity levels that there is a desire to get it up there. How can we see from Bookmap how the participants are playing in this demand zone to get on board and to get a trade to go up there? Let me just get rid of that whiteboard. Okay, and let me get rid of it completely, actually. Okay. So let's have a look. So in candle terms, I may actually need it again, so I will draw. I'll start drawing. So if we reference the candle that we just had on that whiteboard, that is the same as a wick. So that's one area in which if they come back to, we're interested. Where we then begin to use the magic of Bookmap, or I suppose the better way of saying it's not magic, it is just the X-ray capabilities, is what do we see in the heat map to target these levels above. Let me get rid of that again. Let's get rid of that. Okay, I might have to ditch the drawing because it's going to interfere with what we're looking at. So in pure candle terms, we were looking at around about there as potential areas. What I tend to do, because I am more a liquidity and a here and now trade in the present kind of trader, is wait until we see action that is actionable. Wait until we, whether it's from the heat map, whether it's from whatever else it is that you use to form your trades before we get in, and not go on the basis of some candle wick being the true demand zone. I've looked at those courses. I've read the books, but whilst there can be some benefit in that kind of analysis, I think it's better to be in the here and now and the present, and to actually see whether anything is forming into a true demand zone, and then jump upon it. Okay. Okay, so if that was a demand zone in that little candle wick area there, one of the things that you could have done if you were trading pure supply and demand is just jump on board when it got back there. On this occasion, you should have had a winning trade, provided you scaled out accordingly. One of the other things that you could have waited for was a spring, and we talked about those in some depth in Wednesday's webinar. A spring is a failed breakout, and a spring is a failed breakout down. So you have a pivot or a swing point low here. Price takes it out, but price cannot go further, and it rejects the breakdown below and reverses strongly and goes up. This would have been an absolutely beautiful spring. And if we look at the trade to see that there, here is the spring of that action there. Okay. So if we were using Bookmap to do the supply and demand rather than rely on candle theory, we would wait for real price action. So we would look closely at the liquidity levels here, and they were adding to liquidity around about the 4533 level. So we would be hovering around, waiting, watching. We've got our friend Mr. Market Pulse down there as well, but we'd be watching to see what happened if they interacted with this liquidity that was forming here. And what did happen here? They pulled that liquidity. They let the price go down. They let the price get cheaper, and they stopped various players out. And this is where the stops and icebergs come in. So you've got this swing point low, and you have with the aggregation of the stops, a stop of 240 below that, and that is a very, very good spring target, or sorry, a spring trigger entry. And that then gives you the entry long, or one of the potential entries long, to target the liquidity up there. Okay. And we have our target of yesterday's Globex high around about there. And we also then have an iceberg that comes in and price reverses. But the beauty about this supply and demand zone is you don't have to be right every time. You just have to be, you just have to put yourself into a position that you can make a good return on your 1R risk on a
NQ
trade.
sell 51 stop.
Just trying to keep an eye on the markets as well. So yeah, I just wanted to explain how you take the supply and demand theory and then apply it in practice. By reverse analogy, you've got what we considered to be a potential supply zone up there of the previous day's high, and you can watch the action at that zone there. You could say that was, let me just get the pen again. You could say this was a classic head and shoulders. So you've got an S, an H, and an A, and an S. So you could say in the same way that you've got you'd have your candle drawn the other way there, so it would be the other way, and you'd be looking at that kind of zone. But I will get rid of I'll get rid of these in a little second. But what I would be doing here is, if you are going to treat this as a supply zone, the reverse form of a demand zone, what is the liquidity presence there, and what is actually hitting the columns? Do you have enough buyers trapped up there to be used as fuel to get down much lower? And here, if we, sorry again, I have to zoom out so we can actually see. We have a nice little delta zone here, 1, 2, 3, 4, 5 price levels of trapped potential buyers. We have heavy liquidity. We have a price action formation which suggests that you have a supply zone with a head and shoulders, and you take that down. So that could be considered there as a reverse spring or up thrust, and this is a test. So either of those as potential entries. You've got an iceberg there, and you have some stops up there, but what is more important than the small level of stops there is what is the total number of potential trap buyers up there. And just as important, what time of day? Let me get rid of all of those drawings because they're just going to cover everything up. The other thing that I keep mentioning is it's the time of day. So if we look on the bottom scale there, we can see the London Open. So it goes down, gets into that demand zone, takes it up higher, and then when does the reversal actually happen? We are about just after an hour into the London session, so we're between 4 and 4:30, so about 4:10 to 4:15. What happens more often than not is that if there is a move in the first half hour, that move can often continue for the entire half hour. So in other words, we won't likely get a reversal in that first half hour. But after that period, the 30 minutes later or the hour later can be great times for reversals. Okay, all right, we are coming up to 24 minutes past, and we have got some news coming out. So let us just I've got a question from Dave. Is this a live stream on YouTube? I can't see a stream there. I've got the YouTube page open and I've got 13 people, only 13 people watching that at the moment. Again, this is a very, very new stream, so we're not expecting much of an audience at this stage. But yeah, it looks like it is streaming okay. And the one in Discord is definitely streaming. Not quite sure that. Okay, I will. Yeah, I'm just double checking to make sure it's working in Discord. Okay, all right, we're 5 minutes away from, or less than 5 minutes away from the release. So let's forward to live price action and watch what is happening in ES and NQ. So far we've had in NQ, it's gone up, taken out the stops above yesterday's high. The green line is yesterday's high, and it's come back down to tag settlement, which is the magenta or pink line. In ES, we've gone up to yesterday's high, and that's the yesterday's Globex high. And let me just go back to automated scaling, and has tagged settlement and is now rebounding and getting close to value. The dark shaded area is an approximation of intraday value, and both ES and NQ are closing in on value or just about to enter value as we approach this major news. Okay, yeah, sorry, Dave. I do apologize if that Discord was not functioning correctly. But at least now we have it up and running before the non-farms release. Okay. And I will actually put on the I'll put on the financial juice feed so we can actually hear the release as it is made.
This is a big old release, boys. Big old release.
I'm not sure whether that's going to be loud enough for you, but you might be
Testing
able to
1
hear
2.
it. And we'll stick with ES. The action in NQ is likely to be very, very volatile. So in other words, it could go a very long way in both directions. But we'll zoom out in ES and have a look at where the major liquidity areas are as we go into the release. We've got a resting iceberg. It's a small number, 38, which has been here. In fact, there have been two icebergs, and the first started around about 4 a.m. New York time. We've got some pulled liquidity above. We have some steady liquidity below at two levels, 4505 and a thick band just above the 4500 or the round number mark. And we've got a tiddly or tiny buy iceberg at 4525 now. I'm doing a quick time check. We've got about 90 seconds before the release. So we'll keep this a little bit zoomed out vertically so that we can catch any price action that is very, very volatile. And we're just going to observe what happens. So my colleague Tom's got a saying that I think is worth repeating, that if the market is auctioning in a direction, when we get a major news release, that's often a pause in that auction process that can often resume later. Here, in terms of auctions, we're pretty much in balance for the ETH session, and we're within the balance or value area of the RTH or yesterday's value. So
1 minute remaining. I'll lead with US non-farm payrolls.
So we are balancing in a value area rather than exploring or trending in a particular direction. So it should be interesting to see whether we move in an extreme fashion in both directions or one direction and then come back to value. That's one guess that I have, but we shall see. And another of the guesses is that this heavy band of liquidity will get filled. In fact, we would anticipate both this liquidity and some of this liquidity to be filled if the price is quite volatile. Okay, 18 seconds. So we'll just watch through. And again, yesterday's high in Bookmap is
10
just there.
seconds.
Okay, has been
187k, 187k, lower than forecast 200k. Unemployment rate 3.5%, 3.5%. That is lower than the forecast of 3.6%. So also seeing US average earnings year over year at 4.4%, 4.4%. That's higher than forecast 4.2%. Canadian employment change minus 6.
Okay, we'll just turn off the financial juice stream there. But yeah, the first thing I think as we begin to zoom back in on the time scale, first thing that we're seeing is that this liquidity, which held steady throughout the release, and this liquidity is up at 439. They're approaching that one. So again, it'll be interesting to see whether they get to it or they trap the buyers there first. And we can see a small number of buyers on the delta side that are up there. We can also see if we zoom out that they added some liquidity above and the liquidity below remained steady. So a question of whether this liquidity, which is at a round number, is just pressure to push it down, or whether they actually want it to be filled. This liquidity band here at the 39 level looks more likely to be the kind of liquidity that they do want to fill straight away. We're seeing more and more icebergs. We've now got 3 sell icebergs where they're just taking a few buyers and positioning themselves to take some more. Yeah, my view on resting icebergs is the longer that they rest, provided they are above the market in ES, the more likely they are to be tagged at some point during a session. And I'm talking more about the RTH than the ETH in regards to those resting sell icebergs above price. So this little iceberg here of 13 has only had, it's not been here for long. But it's interesting here, you've got if you look at the delta, you've got a nice distribution of potentially trapped buyers. But it's interesting that the biggest level of liquidity in the order book, which on this screen is 464, has not been tagged yet, but it's resting and it is not flickering. Just seeing how much is below it. Yeah, that's got it pretty heavy as well. And whenever you're interested in particular resting liquidity, I believe it's always worth looking at the actual number of orders in the book, not just at the coloration of the heat map. So at the moment, you've got a thick band of liquidity, a sell iceberg, and a nice steady resting thick liquidity there. But yeah, they keep taking little sell icebergs, which gives you the feeling that they want to trap some buyers and move it down towards the liquidity that we saw below, which has stayed steady again. Yeah, in terms of non-farm payroll releases, this one is not that volatile. You know, you could have a completely different price scenario where it could take out that level and that level within the first 15 seconds. But this has been quite gentle and gradual. So yeah, so what we're seeing, so what I was commenting on was there was a distribution of buyers that were potentially trapped to start with, and this is a delta column. You can see how many buyers there were up in this right-hand column. And the first action they did, as we zoom back in, was collect a few buyers in this zone here, which is 4535 down to 453350, and they have pushed it down 8-9 points now. So that was the first action. And we know from the positioning of the liquidity in the book that one potential target is down at the 4505 level. And if I look across at the profile for yesterday, or actually just, if I just zoom out on the TradingView chart, you can see where yesterday's low was, which is at 405.75. So that one of the things that is pretty apparent when you do that is that this liquidity band correlates with that. So they're looking for the stops under yesterday's low. That's one of the reasons why they may have such a thick liquidity band down there. Okay, I just wanted to talk through an economic release. I was hoping for a little bit more volatility, but it's certainly better than nothing. Also interesting to check what has happened to our volatile friend Mr. NQ. So if we go back to the release, it's the same kind of thing, except that we've got some nice price action here. You've got a failed breakout or reverse spring or up thrust after the initial high there, or the swing high there. It accumulates some more buyers there up at the 15,490 level and has taken it down 50 points. That's a
NQ sell 59 stop.
That's a nicer trade in my eyes, but the action here was actually quite readable in ES and slow enough that that there were shorts on offer. If you had been observing in the present tense the action as it was developing inside Bookmap. Okay. Just going to try and turn on the market pulse sound for ES, just so we can listen to it for a little bit, and you can hear the different pitch between sellers in ES and buyers. One of the things I think is worth having for these webinars, when we are observing live price action rather than looking back at action in ETH, is to have the volume pressure market pulse widgets side by side for NQ on the left and ES on the right. I'm only going to have sound on one because it would be a cacophony of noise if we got big sells or big buys in NQ and ES at the same time. And I actually prefer just to have it in ES. It's maybe one of those things that I should have had on before the release. I've got a nice marker of the release, this big up and down stop above and stop below. So that's one other interesting thing on these news releases, that you could be one of the unlucky ones that gets stopped out below or above. So there were 223 MBO stops below and 237 MBO stops above. And if we look at this action, it does look as if they're trying to grind it down, but one of the things that I pay strong attention to, I do this more in NQ than in ES, is that if we do have a strong trend down, but that the delta column is red for many price levels, it's far too late to participate in the action. In other words, far too late to participate in any selling action. And the most likely action initially is going to be some kind of reversal to stop out those late shorts. So in other words, the highest probability play might be to take a long when this delta column is red all the way down after a big move down. It's semi-scalping, but not completely scalping. Okay. All right, there was a question from, hello Srini, I'm looking at the YouTube. There was a question from Wickers Javed with non-pay payrolls. What were the expectations? I think I did cover that, and I did it by looking at profile. I looked at profile and then I looked at Bookmap. So just to recap what I did there, was to say that in the ETH session, we'd gone above, gone below, we were back in value, and I thought that we would stay in value. We might go up and down, but we were likely to stay in value. I then looked at the liquidity positioning in ES, and I was most interested in what was stable rather than being pulled going into the 8:30 release. So in terms of what was stable, you had this thick band of liquidity below, which is near yesterday's Globex low, and you had a liquidity level up above near yesterday's high. And what turned out, so I thought there was a potential that they would go and tag one or both of those and then reverse. But what did eventuate instead, in terms of what we could see inside Bookmap, was there was a distribution. So there were plenty of buyers in ES that were caught, and we saw a few sell icebergs appear. They became potentially trapped, and then we had a decent move down of 8 or 9 points. In fact, yeah, the move we can see, say, it was about 34 down to, sorry, it was a little bit bigger than I just said, wasn't it? It's more like 19 points, 19, 20 points. So that was a good move, and now we're heading back towards that liquidity. So you still have the arresting iceberg above. Let me just go. You've still got the resting liquidity above, and you're likely to have plenty of sellers with stops just above this zone coming into this liquidity. So one of the things that is tempting for them is if they can play into those stops and tag the liquidity where they've advertised that they wish to transact and do business. Okay, just see if there's any supply and demand that we can talk about. Yeah, I think it's you can see springs on both of these, but because they're economic releases, they're too volatile, they're too wide. I wouldn't count those as true tradable failed breakdowns just because of how far the price action went. A spring that's tradable, really, if you've got a low there, it's not going to go much beyond it and then reject it, because the notion is it's a failed breakdown. If it goes all the way down there, is it really a failure, or did it achieve what it wanted to
NQ sell
achieve?
50 stop.
Okay. One of the things I also say is that in Bookmap, it is always worth, in my opinion, zooming in and zooming out just to see the action from each of your small swing points, just to see what has happened. From this low here, if we grab that area, we have some trapped sellers down here, and we have quite a heavy buy presence all the way up. So they have got some fuel. They've got a target there, or maybe they've got at least two targets. They've got that as that heavy liquidity band they've just added to it, and they've got the resting iceberg. So they've got two. And we know that they managed to get 19 points all the way down, so we would not be surprised if they could get the same on the way up. In fact, they nearly have. I think it's about 17 or 18 points on the way up. Okay, let's just have a quick look at the widgets as well to see what on this screen we can use, as we stay in the present moment of really, really good information. So as I mentioned, with the stop and iceberg indicator, it does aggregate, so that the 544 sell stop there, if you want to know exactly what happened, you have to zoom in, and it goes down to about a 400 stop, which is still significant on an economic release. We're talking about ETH, we're not talking about RTH. So if you get an MBO SI sell stop in the order of 400, that is significant. But what you do need to do, or what I recommend that you do, what I would do if I was starting with Bookmap, is that I would observe I would observe and determine what became significant in my mind. In other words, in this particular subsession between 8 and 9 a.m., is 400 a large number of stops from what I have seen in similar sessions. So in other words, it is sensible to spend the time looking at it, doing the analysis, forming your own views of uh, what is a significant level that can be then used as a potential trigger. If you've analyzed this for weeks and weeks and weeks, and you've said at this time of the day that is a huge number, that then becomes a potential long trigger in the arsenal of long triggers that you have. You might have other triggers. For example, this might have just got to almost the liquidity band and had a very, very small number of trades there. That might have been a trigger to you. But I often find that a large number of stops on the SI indicator can be a useful trigger. It's just one of the potential triggers. There's absolutely zero guarantee that this will be a winning trade. And as I say time and again, every single trade you take is a 50-50 bet. It does not matter if it's a particular setup that you have researched in accordance with your plan. Every individual trade is its own instance, and you have to mentally accept that it is 50-50. And it's only by looking at a large number of the same setup do you get the statistics that you led yourself to believe should occur. That is basic 101 probability, and it's just one thing that we have to, or I have to keep stressing, and I will stress, as and when we do these webinars. Okay, some action that is, I'm not going to continue too much longer with this live watching the NFP action, but one thing we can see here is a sizable iceberg. As we get closer to RTH, I take those icebergs with a pinch of salt, and as I said that, it disappeared. But they did transact 314 beforehand. I think I've already said that, with those sell icebergs, I like the resting icebergs. When they're there, I really want to see how many contracts are traded rather than just the fact that there is an iceberg at that price level. Okay. Right, time is moving on. And if I go back to the agenda that I posted into Bookmap, I wanted to have a very hold on, I have a question from Mason on YouTube, so let me answer that question. The pink line, okay. Okay, Mason, let me just stress that everything on my TradingView charts is free. So there is nothing that's proprietary. You can go and create this yourself from scratch. On this is the VWAP bands, which are an approximation of value. So the dark grey one is just a first standard deviation of value, and that's just an approximation of where value is in the intraday session. The green, pink, red lines. Okay, the green line is yesterday's Globex high. That's the TradingView session of 1800 New York time through to 1700 the next day. And the red line is the low, so it's the high or and the low for that entire period. So it's not differentiating between the RTH and ETH sessions. This is a very, very simple chart. I do differentiate between those, but not in TradingView. Okay, this is really about watching two markets in lockstep or when they're not in lockstep. Okay, so the pink line is the close, which is an approximation of settlement. It's not going to be exact, but it's very, very close to where settlement did occur. So you can think of it as yesterday's close. If you want the true settlement value, you need the daily data from the relevant exchange, and in this case, it is the CME. And for ES, I can tell you that the true settlement was 4521.75, so 4,521.75. And on this occasion, the TradingView number tallies with that perfectly. You can see 4521.75. So that is yesterday's settlement. For the purpose of these webinars, when we're talking about home, we're discussing, one of the scenarios that we discuss is that the market likes to come and tag its home value, or it likes to go and play. It likes to go and play tag and go back to home base once a day or several times a day. So that is one of the reasons why we have a bright pink line on this chart. Okay, so hopefully that answers your question. Okay, and the black line there was, obviously VWAP. If this is one standard deviation, the middle is VWAP itself. Okay, the price action is getting very close to that resting liquidity. So, you'll hear me say this time and again, having these heavy liquidity levels are worth having on your screen, provided you've done the research on how they can be used. And the longer they rest, and the more significant the orders in the book, the more attention I may give them in these webinars. Okay, but on this occasion, yeah, we've got reasonably close. Okay. All right, let me just see if there are any questions in Discord. I don't think there are. Nope, no questions in Discord. Wickers is asking for the recommendation for the best platform to view order flow on YouTube. He is. Wickers, this is a Bookmap presentation. What I am going to do, or what I have been doing, and what I would do in future webinars, is talk about the order flow as you see it by the microsecond and zoomed out in Bookmap. So, the view when I present these webinars is, yes, this is it is the most accurate way you can possibly see order flow. Order flow can mean lots of things to lots of people, but if you want to see the best representation of every single trade in a market, and that really is what order flow is, flow by flow of every single trade, this is it. This is Bookmap. So if we zoom in, and we're zooming in right now, you can see every single trade that is hitting the book. That is order flow. That is the flow of orders. That is the flow of trades, and the order flow as well is how is the order book in relation to those trades. So that is where the heat map comes in, and that is a key part of what order flow is in my definition. And my definition is just one definition. There'll be plenty of definitions out there. Okay, and we're still grinding our way up to this liquidity at 4540. So again, a word of caveat or caution about some of these icebergs and how you might use them. So I mentioned that I sometimes, or I can use them as targets, these sell icebergs. If you, on the other hand, relied on them as evidence that you must, or it was a potential entry to short, you just, again, you have to do the research. I think you've got a few examples here. If you'd taken this first one, they didn't fill the iceberg completely, and then they moved down there. So if you'd taken it down there, you would be underwater, and again underwater there, and there and there. You might have got a small trade in your favor there. And meanwhile, we have now hit that resting liquidity, which actually got moved up. Let's see if it transacted with it. And this again is the beauty of Bookmap. You can see whether in each scenario, on each occasion, that liquidity that has been resting, or actually wasn't resting here, it got moved, was traded or transacted, or it was just an advertisement by a bigger player to advertise the fact that it was likely or potentially likely that business could be conducted here. So that's one of the other things. I mean, even though I talk about the value of resting liquidity, I always try and stay in the present moment, and I accept that that liquidity can just be completely false, and it can be false advertising, or it can just be a lure to get price up to there and for them not to transact. But often this, what may happen is that you get enough of the transaction so that it still represents really good price information. So for example, it may not have traded at this level exactly, which is 4540, but you can see there was a large trade of 718 there. Maybe I should drag in, maybe it was actually transacted. Let's have a very good look at this one. And this is again the beauty of Bookmap. So if we go right out, yes, it was transacted here. You can see they took some of the orders off, but there were 106 contracts bought into resting liquidity, or the liquidity that was placed there, regardless of whether it's resting or they just moved it there. But there were no contracts traded in this initial zone of where we thought where we noticed that resting liquidity was. So that is the absolute beauty of X-raying into Bookmap. So you can see and you can note, and that was one of the things that I did want to talk about, was journaling. It is so important, in my personal opinion, to journal what you observe. You are in a probability game. It can be a high probability game, it can be a low probability game, but you can improve your edge and your game by observing and taking taking detailed notes of what you see in the present moment. This is not after the fact, not after the action has happened. So we're talking about time stamping your notes. So say you saw some action here, and this is just me talking very high levelly about journaling. Say you saw some particular action about pulling and transacting at this high liquidity level. You do a timestamp note at 8:53. So you've written down when that occurred, and you've written it down in whatever format. These days, there are all sorts of note-taking tools. There are even AI-based ones. There are voice dictation. So you could write a timestamp little note of what you saw there, and then have that easily referenced by search or whatever, so that you get a picture of exactly how this kind of order flow plays out, so that you understand from a probability perspective the likely scenarios should it happen again in a similar scenario. There is absolutely no guarantee that it will happen in exactly the same way, but I believe it does help if you know the potential things that can happen that you've seen with your eyes in real time and noted in real time. So it's one of those things that I do strongly recommend. We will also talk about preparation as well as post-session reviews. I will not spend my entire day running a review or a camera replay of exactly what happened. I just think every single moment is different, but I do believe in post-session reviews and prep. But I have particular views on making it as practical and useful as I can. Wickers was saying something nice about not missing webinars going forward. If you go to the Bookmap Discord, they have an events calendar, Wickers. So you can always see a week in advance what live streaming events and what other webinars are going to be shown in the forthcoming week. I think at the moment I'm on Wednesdays and Fridays at 8 a.m. We'll see what happens going forward. But yeah, that's always a good place. So just go to the website bookmap.com and search events calendar, and you'll find out what's coming on. There's quite a selection of presenters. I highly recommend my colleague Tom if you want to learn a lot about volume profile. I focus in these webinars on the ETH action in ES and NQ. I look at particular styles of trading. I look at different components that you need to get you to trade in a way that you can take on the casinos that is effectively what this market is. So it's just really ideas for how you can approach trading of NQ and ES in ETH and sometimes also in RTH. But that's what I will be focusing on in these webinars. Again, I apologize to anyone if I did not start the Discord webinar in time. Again, I'm learning on the job on this one. I've been learning OBS for a few days now. But yeah, I hope some people appreciate that this is not overly prepared in advance, that this is really a webinar about the here and now, the present, and observing what you can see in real time, rather than something where people present perfect pictures of supply and demand, for example, which very rarely happen in practice. Okay, I'm going to wrap it up there. So thank you again for coming along, and cheers. Have a great weekend.